Today, Bitcoin and Ether are in the green, but after racking up big losses in August. Ticketmaster teams up with Dapper Labs for ticket NFTs, and blockchain professor Omid Malekan explains the energy benefits of Ether's big merge. Welcome to CNBC's Crypto World. I'm Jordan Smith. Digital currencies staging a small comeback this morning. By noon Eastern, Bitcoin regained the 20K level, Ether jumped to $1,500, and Cardano climbed to 45 cents. Even with today's gains, though, it's been a pretty dismal month for crypto. Bitcoin and Ether are set to end August down 13% and 6% respectively, and right now, September doesn't look much better. Investors are awaiting the next jobs report on Friday, and they're also bracing for another interest rate hike from the Fed at the end of the month. Then there's the Ethereum merge, which has long been good news for Ether, but now some of the biggest holders of ETH are selling ahead of that upgrade. As we told you earlier this week, analysts think that selling could continue until the merge is complete. All right, let's talk about the top stories. First, Ticketmaster just picked Flow Blockchain by Dapper Labs for its NFT service. The ticket vendor will let organizers mint NFTs for backstage experiences, collectibles, and proof of attendance. In a statement, Ticketmaster said it picked the Flow Blockchain because it was specifically designed for fan engagement. Next, the president of Paraguay vetoed a bill that would recognize crypto mining as an industrial activity. The bill, which was passed by Paraguay's Senate, would have established a 15% tax on mining, which has surged in the country. President Mario Benitez said the bill would limit how much crypto miners could be charged for energy use, which could hurt energy providers and sustainability. The bill now heads back to the nation's Congress, where if both chambers approve the bill, it will still become law. Finally, Crypto.com accidentally sent millions of dollars to the wrong person. An Australian customer requested a refund of about 100 Australian dollars, or 68 US dollars, but because of a typo, the crypto exchange sent her more than 7.2 million US dollars instead. Now, the customer didn't notice for several months after some of the cash was gone, but she still made off with about 1.3 million US dollars, which she then spent on a mansion. Crypto.com has filed a lawsuit in the hopes of getting those funds back. All right, for our main story of the day, let's talk about energy. The Ethereum merge promises to greatly reduce the network's energy consumption, but what does that mean for users, validators, and businesses? I spoke to blockchain professor Omid Malekan to find out.
Okay, so let's start with the basics here. Can you talk a little bit about what the merge is and how it will change Ethereum's energy consumption?
The merge is the culmination of years of work in the Ethereum community, going all the way back to its founding to transition the basic security from proof of work mining to proof of stake mining. The proof of stake chain has actually been live for over a year now. It just hasn't been used. So the reason why we call it a merge is we're now combining the existing proof of work blockchain with the ongoing proof of stake one. And if all goes well, then Ethereum's environmental impact will diminish significantly to that of any other arbitrary computer network because we will no longer have mining.
So what does that mean for miners or what they'll become as validators on the platform? What does that process look like for them as they transition to this new consensus mechanism?
Miners and validators are both doing the basic job of securing a blockchain, for which if they do a good job, they earn a fee. But the big difference is that in order to be a miner, you need both sophisticated hardware and access to cheap electricity. To be a validator, however, all you really need to do is own some of the native token ETH, which anybody can do. And there are services now, exchanges and whatnot, that will actually play the role of staker or a validator for you, and you just collect the fees for doing so. So the biggest impact of a successful merge, assuming that the proof of work chain goes away, which it might not, but nevertheless, it's that the Ethereum proof of work miners are going to see their revenues drop to practically zero.
Is there a possibility that Ethereum miners right now, when we transition to proof of stake, will start mining Bitcoin instead?
It's highly unlikely for them because you need this specialized ASIC hardware to do Bitcoin mining. And that is not what Ethereum miners use today. Different hash function and different consensus algorithm. So Bitcoin mining is probably going to be unaffected regardless of whether the Ethereum merge succeeds or not.
Is there a concern that spinoffs or a remaining proof of work network could have an impact on that promise of 99% reduction in carbon emissions?
Yeah, depending on who you're blaming for that. At the end of the day, part of the appeal of this world is that it's all community driven. So if the broader Ethereum community decides to migrate to proof of stake, but then a small subset of that continues to operate a proof of work blockchain, then it wouldn't be a complete drop in Ethereum's environmental impact, but the people who migrated to proof of stake would say, we don't care. That's not our responsibility. If some validators, some miners want to keep mining the proof of work chain, that's on them. But there are many reasons to expect it's going to be very challenging for the miners to actually keep a viable proof of work chain going after a merge.
So let's assume that there is this mass transition to proof of stake. There's no major spinoff that gets real traction. Do you think that this will spur institutional investment from clients that are more concerned about ESG? I think about BlackRock, for instance, where they've had a really big focus on this ESG investing. Do you see that they might be more interested in Ethereum going forward?
I think marginally, yes. And that's been a narrative that's actually been building for months now. And it's perhaps one of the reasons why, since the lows were made in crypto prices earlier this summer, Ethereum has bounced stronger than Bitcoin. But it's also important to remember that crypto's new and confusing and complicated. Everybody's investment decision is going to be multivariable. So while the migration to proof of stake might move the needle a little bit on an institution picking ETH over other coins, there are probably many other considerations that go into their decision making.
Do you think that ESG narrative will materially shift the interest in Bitcoin, because you'll have this comparison of where, okay, well, Ethereum is a lot more energy efficient, there's less concern around its environmental impact? Or do you see that won't really have an impact on people's investments in Bitcoin?
I think it could have a small impact, particularly given that we are now in a time of a growing energy crisis in places like Europe. So whatever people's negative association with proof of work mining was before, it's going to be elevated now that you have all these accounts of small businesses closing shop because their energy prices are too high, or people not being able to fuel their homes in the winter. But that said, I still think that it would be a mistake for any investor to look at two different blockchains and two different coins and decide which one to invest in just based on the environmental impact.
If this merge fails, if the upgrade doesn't happen, how will that affect sentiment for Ethereum? Do you think that, it'll just be a matter of, okay, well, when they try again and they get it right, we'll be here waiting for that?
I think this time around, if the merge fails or it gets significantly delayed, a few days might not be a big deal. But if it's a few weeks or a few months, or if catastrophically something goes wrong during the merge to the extent that, say, important DeFi protocols that people rely on stop working for a while, that would be very negative, just because there has been so much hype and expectation built up in recent months with the expectation of what happens after the merge.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.